In the wake of my Forex fund scandal, a lot of Forex prop traders will be looking for a safer space to get funded and to keep scaling their capital while eliminating risk to their own savings. As such, futures trading prop firms are a much safer space, especially the firms that will fund you into a real live account because they have to abide by the futures trading regulations. You will find a list of those that I support below this video in the description box when you expand it. Now, the whole dodgy business of spreads manipulation to destroy somebody's profitability is just not an issue in the futures space because there are no spreads in futures, or they're usually very, very minimal, and that always comes from the centralized exchange itself, not from a broker. Now, before we go on, let's go wash the car. And no, I don't have a Lambo. I do have a Mini Cooper S though. In hindsight, I probably should have done that car shot after the car wash. Now, while I'm driving there, I also want to say that slippage cannot be controlled by a futures firm because futures contracts are standardized products with clearly defined specs. So anyone in the futures space has to follow very strict guidelines. They cannot just change spreads willy-nilly out of the blue however they want. Every single order goes through a centralized exchange. Alright, now that that's done, let's learn how to switch from trading Forex to trading futures in 10 minutes flat. Back to the studio. 1. Futures trading is not that much different from trading Forex, but there are still some differences that you need to be aware of. You still have the same levels, same strategies, same probability, same types of trending versus ranging days, and you will still have the same order types: market order, limit order, stop loss order. If anything, it's actually easier to trade futures because there is no spread. Mainly it's just commissions. Commissions are referred to as the round trip charge. Why? Because you pay commission once when you open a trade and then again when you close a trade, completing a round trip. Makes sense, right? Second thing to know, minimum price movement in Forex is called a pip. The equivalent to the pip in futures is a tick. And how much is the tick or pip value so that you know how to calculate your stop losses and your targets? Well, in Forex, 1 pip on 1 full lot is $10. But in Euro futures, 1 tick on 1 contract is now $6.25. Now, obviously, the tick value will be different depending on what product you're trading. So it's always good to check the CME website where you can find all of this information. Third thing to know, Forex runs 24 hours, 5 days per week. Futures are actually similar, yet again, except they close for 1 hour each day so that the centralized exchange can perform some maintenance. But futures still trade 23 hours, 5 days per week. Number 4, lot size versus contract size. It's actually the same thing, lots versus contracts, but in Forex you refer to a number of units as 1 lot, 2 lots, etc. But in futures you have contracts, so you will say 1 contract, 2 contracts, and so on and so on. Number 5. Futures don't have a continuous chart like Forex. Well, I mean, they do have a continuous contract, but you can't actually trade that. Instead, they operate on a month-to-month basis, or in case of equities futures, on a quarterly period basis. However, Forex, gold, and crude oil are among the futures products that have monthly contracts. Each month will have a different suffix for the month and also the year following the instrument's symbol. For example, 6EZ3, it means your futures are in a December contract for the year 2023. Every month has its own letter, which is a little bit of a random assignment, so again, best to check the CME site for that reference. But the gist of all of this is that you will have to switch to a new monthly chart, effectively, every single month for Forex futures, and that's referred to as rolling the contract. Otherwise, the volume disappears because everyone has run off to trade a new monthly contract, and you're now that one retail trader who didn't realize that rolling contract is a thing. So now you and your mate Dave down the road are the only 2 people still trading the previous contract, and you're wondering why nothing is moving. Which brings me to the next point. You should always trade the front month contract. What's a front month, you ask? Well, it is the contract month with the highest volume. You will find this by Googling CME followed by the symbol that you're looking for example, CME CL for crude oil, and then going to the quants tab, and all the way to the right to the volume tab, and whichever volume has the highest number, that is your front month contract. Since we're talking about symbols, futures have specific symbols for each instrument. 6E is effectively Eurodollar, 6B is pound dollar, 6J is yen, but because in the Forex market the yen is the second quoted currency, as in USD JPY, however in the futures 6J prices, if you look at the chart, it will be direct opposite to the Forex pair that you see. More on futures contracts. Futures come in several clearly defined sizes. What do I mean by sizes? Well, you have micro futures, mini futures, and full futures. Each of those will have a different value per tick. Micros are the smallest. To give you a practical example, micro euro futures cost $1.25 per tick on one micro contract. Full euro futures cost $6.25, and there is even an option for euro mini futures at half that amount per tick of one mini contract. Something else to keep in mind is that futures contracts of any kind don't have nano contracts. So you cannot scale up percentage wise like you would in Forex. You cannot do 1.12 contracts. So it's either 1 or 2. And this means if you're calculating your position size in percentages to take advantage of compounding interest, this is not really possible in futures because anytime you change the position size, you effectively double your position on smaller accounts. So to remain consistent, it's better to think of your stops and targets in ticks. Otherwise, you're going to lose the plot when scaling up very quickly. But a 30-tick stop is still a 30-tick stop, regardless of whether you're trading a $1,000 account or a $1 million account. In either case, moving away from monetary dollar-based values is always a good way to keep your head on your shoulders. Next thing to know is that futures contracts have very small daily margin requirements, which increases rather drastically for any overnight positions, which is why all futures prop firms won't allow you to hold positions overnight. It's simply too expensive. Therefore, trading futures is almost exclusively an intraday trading activity. Number 10, active trading hours. Believe it or not, Forex also follows these active trading hours. You will have a noticeable increase in volume and movement during the active London session, and then yet another increase in activity for the New York session, followed by a quieter period for the Asian session. Well, futures follow exactly the same pattern, except the futures have something called the regular trading hours, aka RTH. If you trade commodities such as gold and crude oil, these typically trade on former COMEX or NYMEX RTH, while the equity futures still reference the cash session for NYSE. So why is this a thing? Well, it comes from the former open outcry pits, which have gone the way of the dinosaur. They are now extinct, but the same folk who used to work at the pits, they have moved into electronic trading. So the open outcry price behaviors have carried over as well. We have a couple more things to know, and then you'll be ready for trading. So the next thing is settlement times. What are those? Since we're talking about open outcry pits, you have to be aware of something called the settlement. It's really nothing more than the former closing time of the open outcry pits, but the settlement price and time would signal the end of the trading session. And it would be time to go get smashed in a pub with your trader colleagues. And maybe a visit to the strip club. Don't tell the wife. Oh, the good old times. Now, this might be obvious, but after settlement, volume and with it the price movement will drastically drop off. Below this video you will find an opt-in page with a download for the futures regular trading hours and for settlement times. While most futures stay open for business, meaning you can still open and close any trades that you have, if there is not much volume after the settlement, continuing to hold your position, it will be very similar to watching paint dry. In fact, watching paint dry might be just a tad more interesting. And finally, if you're someone who likes to trade Forex crosspairs, you might be surprised to find out that while there are futures crosspairs, the liquidity in them is pretty abysmal. But there's actually a better way to trade them. But for that, you're gonna have to watch my next video. For now, this is all you need to move into trading futures. In the meantime, let's try to be less grasshopper and more market stalker, which means focusing on quality trades over quantity. Goodbye.